Welcome to the final episode of Season 1. We will be taking a short break, but I encourage everyone to sign up for our newsletter at ventureunplugged.com in order to make sure you're the first to know about any new released episodes, extra content, and tips, including the best tips from our past guests like Tim Draper, Justin Kahn, and Leah Boosky-Sullivan, to name a few. So sign up today at ventureunplugged.com. Hi, I'm Mayra Ceja, and you're listening to Venture Unplugged. From deep tech crypto to direct-to-consumer brands and products, each week we dive in deep into the lives and challenges of today's most successful founders and investors. New episodes launch every Tuesday. Sign up for our newsletter at ventureunplugged.com and subscribe on iTunes or Spotify. Follow me on Twitter at MyraCeja007. I'm really excited about today's episode with Andrew Dudum, a fellow Wharton alumni and the founder of HisHers. In this episode, we discuss how he took the company from zero to $1 million in revenue in just 1 week and eventually reached $1 billion valuation for his company, and the best pieces of advice he's received from Kirsten Green and Peter Thiel. This episode is brought to you by Qtum and AWS. Qtum is the first proof-of-stake smart contracts blockchain. It has been around for over 2 years and has over 4,000 nodes around the globe. If you're tired of paying high fees on other smart contract platforms, head over to qtum.org. That's QTUM.org and start building your own low-fee Solidity smart contract today. This podcast is co-presented by BlockWorks Group and Republic. BlockWorks Group is a blockchain events and media production company. For exclusive content and events that provide insight into the crypto and blockchain space, visit them at blockworksgroup.io. Republic is an investment platform that helps companies raise capital from retail investors. For more information, please visit republic.co. From Airbnb and Lyft to Slack and Twilio, the world's top startups build on AWS. AWS has helped hundreds of thousands of companies to build and scale their businesses. AWS has unparalleled insight into the unique needs that startups have and the opportunities that startups chase every day. For more information, go to aws.amazon.com/startups and follow on Twitter at AWS Startups. Sometimes a cactus is just a cactus, and sometimes it is not. Erectile dysfunction, sexual wellness, hair loss, skincare are not easy topics to demystify, but this company has taken on the challenge and is changing the way millennials talk about these thorny issues. Goodbye old blue pills and hello Hims and Hers. And if you want to laugh or two, just Google marketing ads for Hims. Today, we are speaking to Andrew Dudum, the founder of Hims and Hers, a health and wellness company that recently received unicorn status with its $1 billion pre-money valuation. Hims is backed by Forerunner Ventures, Founders Fund, Redpoint Ventures, SV Angels, 8VC, and Maverick Capital. Prior to Hims, Andrew founded Atomic and is still a partner there. Atomic is a venture builder backed by Peter Thiel, Marc Andreesen, and many other of the world's best investors. Now, enjoy the show. And remember to sign up for our newsletter at ventureunplugged.com to continue to receive content until we come back with full episodes for Season 2. Hi, Andrew. Thank you so much for coming on the show.
Thank you for having me. I'm excited to be here.
Andrew, now you're one of the people who I've always wanted to interview for a couple of different reasons. One, I think the company that you've built here is simply amazing, and you've had this meteoric rise to unicorn status in such a short amount of time. But it's not only that. I think it's also your ideas behind leadership and startup building that I'm excited to share with our audience today. But before we get started, why don't you tell me a little bit about your background? I've heard that you're a rare breed. You were actually born here in San Francisco.
That's right. Yeah. So I was born and raised in San Francisco, down by Ocean Beach. So kind of grew up in the fog on the beach. Family's been here for a long time. So I'm third or fourth generation from the city. I was a cellist for the beginning years of my life. I think the first 15 years of my life, I was traveling the world playing cello, playing weddings in Carnegie Hall and all types of things. Realized that was not particularly the career path for me. So decided to go over to Philly and go to Wharton when I was 18. Spent a couple of years there, spending most of my time hanging out with the engineering kids, trying to convince them to not show up to class with me and build stuff. And so after a couple of years, decided to take a leave, come back to San Francisco, and get into startups, which was really kind of my passion. I was just obsessed with design and business models and prototyping different ideas. And that was kind of the beginning of the whole journey.
Wow. So from cellist to the renowned Wharton School. Now let's flash forward for a bit to the founding of HisHers. Walk us through that decision-making process. Where were you at in your career, and what were the key decisions that you were looking at?
Yeah, so I, for the last 8 or so years, have been running a fund called Atomic Labs, which is here in San Francisco. And it's a bit of an interesting model. It's a venture fund where we build our own companies. So it's a fund I founded with a fellow Wharton grad, Jack Abraham, in around 2012, 2013. It's a fund that's backed by amazing people in the Valley like Peter Thiel and Marc Andreesen and some of the best venture funds out here. And essentially what we do is use the capital to prototype 15 to 20 ideas per year, understand their distribution, their product market fit, their sales positioning, their price points, what could really resonate with consumers. And then of those 15 to 20 tests or whatever it might be, we end up building just a few companies. We end up spinning those out, investing a lot of time into them, founding those businesses in-house, building out the kind of senior executive team, raising capital for them and scaling them. And so, I had spent a lot of time in the last decade building companies. I think we've prototyped nearly 100 of them or more. We've ended up building over a dozen of them, of which many have had great successful exits. Many of them will go public in the next few years. And so it's been a really amazing experience. And so I thought I would be doing that for frankly my entire life. It's kind of the entrepreneurial dream job. But what was happening in the healthcare system, in particular the opportunity with HisHers and HisHers, was pretty unique, right? You essentially have the last untouched large market in the country and the world, which is the healthcare space. You're talking $3-4 trillion of spend, the most spend we spend in any market. Yet we have some of the worst care per spend in the entire world. And it's a market that's been completely untouched by technology. So when you think of transportation, right, you open up your phone, you click a couple buttons, a car appears, you check some hotels, you check a flight, you book it, it's done. If you think about real estate, you evaluate some houses. You can sell your house really quickly online today. You think about commerce or retail, right? The huge growing amount of mobile and digital first penetration, it's all entirely technology enabled. And then you think about healthcare, and you still need to call the hospital, and you still need to figure out a schedule. And then it usually takes on average 25 to 30 days to make an appointment. And then you still need to take 3 or 4 hours off of work and get childcare, show up, wait in a line, go, and the doctor tells you exactly what is you're going to do without any transparency of information or choice or price. And it's just an experience that, quite frankly, has not been evolved or, revolutionized, frankly, with modern technology. And that, to me, is just exceptionally fascinating, right? The experience we use today in healthcare is the experience that was built 50 to 60 years ago, and it hasn't changed, despite all of the technology and all of the consumer behavior that's adopted in every other market. And so, I decided to leave, full-time focus on Atomic, and I'm still a partner there, and I spent a lot of time trying to help that portfolio and that team, but decided to dive in and run HisHers and HisHers and found that business just because I think it's a rare opportunity to build a business that can help millions of people get access to care, can completely uproot an industry that has been built on a lot of incentives and a lot of money, but very few of them focused on the consumer and actually a better consumer experience, and doing so all with brand new technology, modern ideas, modern technology, and a team that's both consumer-oriented, marketing-oriented, healthcare veterans, and bring all those people together in the same room to try to tackle it. So it was just kind of one of those opportunities as an entrepreneur that doesn't really come around that often. And I think I saw that and was pretty convinced of that. And it was one of the ones that if I was going to spend 5 and 10 and 15 and 20 years building something, this was the one that kind of caught my eye to do so.
Now let's dive in deeper on HisHers. Now, I'm looking at you right now, and you have a full set of hair, yet the products that you launched with were erectile dysfunction and hair loss. Tell us, why did you launch with those particular products?
Yeah, well, I use most of our products, I can say, and they work very, very well. We decided to launch the business with hair products and sexual wellness products for men for a couple of reasons. The first reason is, as a man, one of the things I learned pretty early, and this actually started when I was at Wharton, was you're sitting around a table with 10 or 15 buddies. They're all struggling with the exact same things, right? It's about 30% of men by the age of 20 are losing their hair. So you're 20 years old, 21 years old, a third of the guys around the table are losing their hair. About 40 to 50% of men are struggling with sleep. So half of them are exhausted and didn't sleep the night before, and they're just kind of brushing it off as stress, and they're fine. 40% of men, even in those ages, are still struggling with acne, right? And so they're going to CVS and Walgreens or Wawa's, right, like near campus, and they're getting some over-the-counter water plus soap combination to try to fix their acne. And so everybody is struggling with very human, very normal things, and absolutely nobody's talking about them. And I thought that was really fascinating, right? I think when you look at the women's market, there's a tremendous amount of bad when it comes to marketing in the women's market, but there's also a tremendous amount of good in the last decade around hundreds of millions being invested to tell women it's okay to take care of themselves, right? It's okay to buy products that make them feel better, that make them feel more confident, that make them more productive business women and leaders, or moms or spouses or sisters or whatever it might be. And that marketing really hasn't happened yet, and hadn't happened for men. And so as a result, you saw a whole bunch of guys that I think were kind of outside of the system and not taking proactive steps to take care of themselves. And I think with hair and sexual wellness, they were right on the acute cusp of those issues. They were very reflective of that. They're issues that are really uncomfortable to talk about. They affect many, many people. They're exceptionally normal, but nobody shares that. Most men never even seek treatment because they didn't even know something could exist, right? They were just assuming they were stuck with this issue. So there's a huge lack of information and a gap there. There was a huge price gap, right? So historically, these medications were prohibitively expensive for a normal man in his 20s or 30s. You're talking about guys that are graduating college and they're trying to find a partner and they're trying to establish their career and they're renting, and that type of profile of a person can't be spending $200 and $300 and $400 per month for products like that. And so we felt we could bring the best medical products in generic forms and through kind of direct to consumer means at much better price points. And so we decided to kick it off there and kind of start the conversation with men about some of the most awkward conversations in their brain, with the hope to then expand into other areas where we know they're struggling with, but are not seeking care. And so we moved really quickly past then, and since that point, I think we now have close to 100 products we sell on Hims and Hers across the business. But those two categories in the beginning were just really reflective of, I think, the issue in healthcare around stigma and price and transparency and education. And so we chose to start there. So as a female, I was absolutely thrilled to see Hers launch. What has surprised you the most between the Hers brand and the His brand? There's a lot of differences in consumer behavior between men and women, but I think it's really subtle. And so for that reason, it's not as simple as saying, men are simple and like jokes and women take their time and research, right? I think a lot of people believe that. And in some situations that's true, and in other situations it's completely not true. But I think what has been surprising is that just like we saw with Hims, when it comes to Hers, being smart and being witty and being humorous and silly and sometimes provocative works just as well for women as it does men. Most of our marketing team for Hims is women, right? I think the vast majority of that creative team is women. So much of what people know today as really kind of fresh and in a lot of ways disruptive media and campaigns we've done that don't really look like other campaigns, and in some situations push the boundaries of awkward or silly or provocative. Those campaigns were created by women. They weren't created by men. And so we've started to see and continue to roll out similar campaigns for women and see the same results. And so I think there's just a universal desire to be entertained. I think there's a universal desire to laugh, a universal desire to have a moment of being silly but smart, right? It's never crude and unintentional. It's always intentional to start a conversation, but being smart and considered and witty is just kind of universally accepted and admired, and I think appreciated. And I think we've seen that across both men and women's brands.
Now, you mentioned some of the jokes were written by women. I was surprised to find an interesting stat that 62% of your executive team is women, 50% of your customer service is female also. Mm-hmm. And in Silicon Valley, that's rare.
Yeah.
What do you attribute that difference? Has it been intentional in terms of how you've hired?
Yeah, it's been intentional from the beginning. And I think unfortunately, it won't happen unless you're exceptionally intentional about it. Our first investors were Forerunner and Kirsten Green, who's just one of the best consumer brains in the country and has invested in some of the best businesses, from Bonobos and Glossier to Jet to Dollar Shave Club. She's incredible. And one of the things I think we talked about really early was, if you're going to build something new, and if you're going to build something that talks to men and women differently, you have to have a materially diverse group of people in the room to help shape what is new, right? If it's all men that are the same, or all women that are the same, or all people with the same education or background, you're going to get the same type of message. And so from the very beginning, the founding team was evenly split men and women with kind of all types of demographics. Our executive team is majority women. Our marketing team is majority women. Our engineering team isn't quite there. I think we've got some work to do on continuing to equalize that out. But I think we've been very, very intentional in making sure the organization is representative of a lot of different voices and a lot of different opinions, because how we want to talk to people in our brand and how we want to deliver products to them, we want to be different. And the only way to do so is to have a pretty different group of people at its core creating and working on that stuff.
Thank you for sharing that. And I do believe that having intentionality behind your hires is crucial to changing the status quo. Hopefully, a lot of our companies will find that inspiring. Now, you mentioned Kirsten Green, and I think a lot of people in our community really admire her. What has been the best piece of advice she's given you?
Oh, man, she's given me so many pieces of advice. So the best piece of advice that Kirsten has given me on quick thought, and I think if I were to spend more time, I'd probably come back to this too, was in the very, very beginning phases of building the brand and building the company. And we went in a exploratory direction to identify all different types of vibes that this brand could take, hims and hers. We knew we wanted to be inclusive. We knew we wanted to be youthful. We knew we wanted to talk with authenticity and be smart and witty and fun and irreverent. We knew all of those things, but we didn't necessarily know what it looked like, right? We knew what it wasn't, but we didn't necessarily know what it was. And so we set out to essentially build a ton of different options. And we did. We built 5 and 6 different brands, and we looked at them and we debated them. We tested maybe a dozen different names for the company, and we tested them and evaluated them. And there was a little bit of paralysis from analysis that took place because we had so many options. We had so many directions we could take it, and it was going to be the foundation of the company. And so I remember one conversation with Kirsten when we were, kind of at the tail end of these debates and we're kind of going in circles. And she looked at me and said something along the lines of, at the end of the day, this is your brand, right? every single day you're going to build this thing. It's got to be reflective of how you feel. It's got to be reflective of how you talk. It has to be reflective of how you think, because if it's not that, it will never be honest. It will never be pure. It will never be special. It will never be different. It will be some combination of, really smart marketing agencies and really smart creative leaders putting together what is cool and modern, but is not you, and it won't be unique. And so the only way that she had seen things come to market with some type of spirit of authenticity had to really be founder-led. That was probably like the scariest thing she's ever told me, right? Because it means, I need to trust my instincts, and nobody's going to give me the answer except for me. But I took that to heart. And I think, I art directed every shoot for the first couple of years. I picked every color. I wrote most of the early headlines with our teams in the weeds, to make sure that I was really in it, in creating the brand. And I think that's probably the best advice that she's ever given me.
That's wonderful. And I think it is this idea behind extreme ownership as a leader that you absolutely need to have in order to create and build the success that you've built. Another investor that you've closely worked with is Peter Thiel, and he's had this famous book of going 0 to 1. You've gone from 0 to $1 million in really a very short amount of time. Talk to us about that first experience of going to that 0 to 1 million.
Yeah, so we... out the gates, we had a pretty crazy week. I think the first week we did $1 million in sales, and that was the smallest week that we've ever had as a company. And so it was, for all external purposes, it was a very quick rise. I think what most people don't know is that really quick launch rise only came after maybe 2.5 years of work. Right. And so that overnight TechCrunch article that people look at and they go, holy shit, that grew so fast. Right. Like most people don't realize it was actually many, many years of hitting your head against a wall to get to that point. And so, I think Peter's done a lot of great writing about 0 to 1 around finding product market fit, around testing distribution, around making sure the engine is working, staying really lean and exploring. And we did a lot of that. We did probably years of that. And we did tests on Facebook and Google. We built prototypes that took us, a day, and then we launch it and trash it and build another one, all to learn very quickly, so that when we would bring the final product to market, it was a really well-informed product, right? I think what a lot of people do when they build companies is they have an idea, they get excited, they convince people to give them money, which is awesome. Family and friends and investors. They then go build the thing that was in their brain. They launch it. Nothing happens, right? Nobody comes running to their door saying that was the best thing ever. And it doesn't explode. So they then look at the numbers, look at the customers, understand why it's not working, and then they go back and work on a V2, right? With all of that feedback. And I think what I've learned as an entrepreneur is try to do that V1, V2, V3, V4, V5 as quickly as possible, as early as possible. Just like money has compounding benefits, right? Like compounding interest. I think building startups and building products and learning also has compounding aspects, right? So the sooner you learn something, the sooner you test something, the smarter you will be from a trajectory path 3 and 6 and 12 months from now. And so, one of the things that I focused on with Hims and Hers, and one of the things that I recommend to teams, is try to learn as broad a set of things as quickly as possible, as early as possible. And it will set yourself up as to have a much faster trajectory for when that product eventually goes live and launches. It might look like it was overnight, but in fact, it was many, many years behind it.
Now for a quick word about our sponsors, and we'll be right back. In addition to being one of the best smart contracts blockchain in the world, with extremely low fees and easy-to-use platform, Qtum's proof-of-stake system lets anyone stake with as little as a fraction of a Qtum. To learn more and start building today, go to qtum.org. Whether it's solving a technical challenge, hiring the right engineers, or finalizing a fundraising round, AWS has the experience you need to get started. There's a reason more startups build on AWS than any other provider. They're here to help you succeed from inception through to IPO. For more information, go to aws.amazon.com/startups and follow on Twitter at AWS Startups. That's wonderful to hear that this overnight success comes years in the making rather than the media article.
I wish it was, overnight. It would be a lot easier.
So we all wish there was a magical pill for that. But let's take a step back. Looking back, what is the biggest lesson that you learned the hard way that you wish you would have learned earlier?
As you build teams, one of the things as a leader that you struggle with is bringing in people who are smarter than you to own things that you are really, really passionate about. For any leader to successfully scale, they need to stop doing stuff, right? They need to start focusing on strategy, or they need to start making sure in general the boat's going in the right direction, or they need to focus on recruiting or funding. But they can't be in the weeds in every single aspect. And when you start a company, you are in the weeds of everything. And so I think one of the things that's really hard as a founder, and it was challenging for me, it still is challenging for me, is to hire incredible people. And then most importantly, let them do their job, right? Like let them do what they're really good at. Give them space to do that. Give them time to do that. That doesn't mean you are, aloof and hands off. You're still involved. But you need to understand, I think, as a business scales, that your job changes really quickly. And I feel like I have a different job every few months. And I think getting comfortable with that is difficult. And letting go of things that you used to be so hands-on and so in the weeds on and maybe got so much energy from is also really difficult, but I think it's kind of necessary. And so that's something that, I've learned with Hims and Hers. It's something I've learned with past businesses, but it's something that I think is very, very difficult as a founder of a company, to be open to that reality and to commit to hiring people that are smarter than you. And then even further so commit to letting them do what they're really, really good at.
You mentioned fundraising, and for all intents and purposes, a lot of people would consider you a master of fundraising. What tips would you have for startups looking to fundraise?
Fundraising is a interesting beast, and I would say it's far more human than most people believe. I think with Hims and Hers, we've raised a lot of capital, well over $200 million, I think in the last decade, across the funds and across the different businesses. We've probably raised, $500 million to $1 billion in capital. And I think one of the things that people forget is that the person on the other side of the table is a person, and they're a human. And at the end of the day, they want the same things you want, which is to be excited. They want to feel like they have trust, right? They want to feel like they have a partner. They want to feel like that partner is honest. They want to feel like they know you, know how you think, know what makes you tick, know why you're passionate. They want to make sure that you're excited about helping people, right, for the long haul. That your vision is something that is the same as their vision. And that doesn't mean they don't care about the deck, right? Or, who's invested in the past, or what your margins look like this quarter, or what your 2020 plan is going to be, right? They care about that stuff too, and they're going to look at that stuff. But I think most people miss the first half, which is that building a relationship with these people as humans and understanding that, they want to be excited about you. They miss that. And so, I think the vast majority of capital that I've raised in my career was without a pitch deck. I don't think there was a Hims and Hers pitch deck really ever, frankly, which is bizarre, right? Most people think, okay, you build this deck, you then go do a roadshow and, show it off to a whole bunch of people, and that's how you raise money. And I think for us, it's kind of been the opposite. You raise money by getting to know really smart people, sharing with them what you're really passionate about, getting them excited about you as a person and you as, a person setting a vision. And then if you kind of have that foundation, then you both mutually can kind of agree to saying, hey, this sounds interesting. I want to work with you, right? Like I check the box of I want to work with this person on both sides. Now let's go and just make sure the numbers and all the things line up as they should. But you're starting from a place of humanity and relationship strength. And I think that's how you raise money. And that's how you raise money from really, really good people. It's how you do it repeatedly from good people. It's how you build great enduring relationships with those people, because God knows as soon as they give you money, something in the business is going to break. It will inevitably happen. And then you have to have a really awkward conversation about, something not working as well as you thought. And it's all so much easier if you start from the beginning with people you know and trust and get to know. And so I would recommend to people to invest in that, not think transactionally about fundraising. Most of the investors that I've raised from, I've known for, 6 years to well over a decade before they ever invested in me. Many of them I pitched companies to many, many years ago, and they turned them down for very good and logical reasons. But I stayed close with them and stayed friends with them. And so I think, playing the human part and understanding that it is a human relationship is pretty important to being successful in that area.
I love that story, and I think it's quite insightful for a lot of our audience members. And it serves as a reminder that it's still such a human element investing with people, and it's such a partnership. Now, I can't let you off the hook without asking, what is the best piece of advice you received from Peter Thiel?
I don't know if there's anything specific that Peter said. I've had a lot of experience with them and their team. They say a lot of really contrarian things all the time. I think that's something that you expect from that organization and that type of brain when you work with them, which is very unique and very special. And if you've read any of his work, it's reflective in that. I think, one of the things that Peter has said to our organization, even at Atomic, about how he evaluates companies and how he optimizes for companies are those that have the opportunity to have huge competitive advantages and take a large market, right? And in some situations that means have characteristics of monopolies, right? Not that monopolies are great or anything, but you want to be able to build a business that is defensible and that can claim a huge chunk of a market. And then once it's claimed those huge chunk, have differentiated foundations and platforms and technology and moats that allows them to continue to grow, protected from incumbents, right? And protected from new upstarts that try and take them. And so, Peter and his team think a lot about that. And I think, I can't speak to their investment criteria, in whole, but I know that that's a part of it. And it's something I think about a lot with Hims and Hers as we continue to build this business. It's an incredible business, right? It's grown 0 to well over 100 million in revenue in its first year and a half, right? And it's accelerating across a number of verticals. And I think we saw 1 million patients last year on a platform across dozens of different medical conditions. And if I'm anybody else in the space, I'm sure as heck looking at what we're doing and going to try to figure out how to copy it, right? That's what really smart entrepreneurs do, is they're following trends. And so as I build this business, we are building moats, and we're building technology, and we're building efficiencies, and we're building competitive advantages that take years to build, and take large amounts of intellectual capital, human capital, actual capital, right, to build. And I think a big part of that stems from this belief of building companies that can be monopolies, building businesses that can be enduring, because otherwise a big and good company will get turned upside down.
Now, before we jump into rapid fire questions, which is my favorite part, I want to end on a happy note. When was your last moment of peak happiness?
Peak happiness? Mm-hmm. We had a birthday party for the company last week. And we have a very remote team. We have people in Guadalajara, in Vancouver, in Montreal, in North Dakota, in St. Louis, in LA, in DC, I mean, all over the place, in many different countries, many different cities. And we flew everybody out to San Francisco for the week. This was last week. And we had a big company party. And it was absolutely peak happiness. I was looking around the room and I was seeing engineers hanging out with our medical team, hanging out with people from our customer support org. I was seeing people dance and laugh and joke around. It was all very Hims and Hers themed, so it was very silly and irreverent in all the best ways. And that was some really good peak happiness, just seeing the org that we've built, the culture that we've built, the fact that people actually really care about each other and have fun together. That was pretty special.
I love that. Now, are you ready for some rapid fire questions?
Yeah, let's do it.
All right. How much do you sleep?
A lot. I sleep probably 9 hours a night.
What's your favorite book?
I love Creativity Inc., which is the story of Pixar. Because it talks a lot about how they structure the organization to consistently build amazing products and amazing stories for people.
Outside of work, what is your hobby?
I like to garden, actually. So I have a ton of fruit trees, dozens of fruit trees that I check in on daily, like a anxious mother, and so that's a really fun hobby for me. That's something that my dad and grandparents and great grandparents have always done.
What's your biggest life hack?
That's a great question. Life hack. I think for the most part, people think in weeks and months when it comes to getting stuff done. And I like to think in before lunch, before snack, after snack, before dinner, and then before bed. And I think that's a really good life hack because you can start breaking down projects and getting stuff done in much, much quicker times.
If you could time travel backwards or forwards, where would you go and what time period?
I don't think I would change, to be totally honest. I think we're in a really special time. I think you've got a world that's progressing in a lot of beautiful ways. You've got disease eradication, you've got poverty improving, you've got a decrease in wars despite whatever the news might tell us. It's actually, from a statistical standpoint, a pretty amazing time to be alive, and those trends from a technology standpoint and health and education are only accelerating. So I'm excited to be where we are right now.
Do you believe in God?
I do.
Do you believe you're lucky?
Yes.
What's the best piece of advice you have for founders?
It's a piece of advice that my dad's given me a lot, which is to keep it stupid simple, or keep it simple stupid, depending on how you want to say it and where you put the comma. But keep whatever you're doing really, really simple. Identify the thing that you believe should exist. Focus on that. Make it awesome. Try to get it out there, but I would say keep it really simple.
Do you meditate?
I try to.
AI, scary or exciting?
Both.
Who are founders that you admire?
There's a lot of founders I admire. I think, despite any type of public scrutiny that they might get, I think Zuck has done an amazing job at Facebook. Frankly, it's so hard to scale as a founder CEO through the stages of life cycle that company has grown through. And so I think while he's probably continuing to learn, I give him an incredible amount of credit for still being there and still pushing. I think Bezos is a terrifying CEO to compete against. He is ruthless and he is an incredible operator, and he somehow has figured out how to execute across dozens of different things with spectacular consistency. So I give him a tremendous amount of praise for that. I think he's one of the best. I think Bill Gates is a personal, admired mentor in many ways. I think his time at Microsoft was great, but I think post leaving has been even more incredible. His dedication to being ruthlessly consistent around how to deploy his wealth and capital to improve the human cause and do that using data is, I think, kind of the best in market. So he's definitely a really big leader in my mind.
What is one thing that you believe in that most people don't?
I genuinely believe that whatever the circumstance you are in, you can materially improve in a very short period of time. I think the mind has really tricky ways of playing you, and for that reason, I think a lot of people feel like their circumstance today is their circumstance inevitably, and I've just seen so many people be able to prove that wrong, that it's something that I hold pretty dear and try to remind myself of.
If you had to travel to one of these two places, would you go to the moon or Mars?
That's a great question. I would probably go to the moon. I just think it would be a better Snapchat.
Better lighting?
Yeah, better lighting.
What is the first thing you do when you feel demotivated?
I take a break. Yeah, I take a break, hang out with my niece and nephew, try to do things that are not work-related and recharge.
One word to describe high school Andrew.
Nerd.
What is your superpower?
Getting shit done.
What do you want to be remembered for?
Being kind.
And that's a wrap on season 1. I want to thank everyone who tuned in to listen, the team, our sponsors, and of course, my fantastic and generous guest. We're going to take a break from our regular release schedule, but sign up for our newsletter at ventureunplugged.com to get additional content, tips, and be the first to know of any early releases. I'll see you soon for season 2 at ventureunplugged.com. See you there.